We're going to discuss the power sector now. There were some comments that were made by the Power Minister yesterday where he indicated that a financial relief package will be put into place to address the power situation, especially for gas-based power plants. And a company like GVK Power is in focus because the company does have gas-based power plants. Isaac George, the Director of Finance at GVK Power and Infra, joins us now. Also, Vinayak Chatterjee, Chairman of Feedback Infra, will be with us in just a bit. Mr. George, thanks for joining us. I want to discuss, certain recommendations that were made by the Power Minister. One was a price pooling of imported and domestic gas. What's your analysis on how much it would make fuel affordable for the power plants if this comes through?
I think there have been guidelines laid down earlier, and I think what the government was saying is that the price should not exceed 5.5 rupees per kilowatt hour. Everybody, all the stakeholders were to take a cut in whatever they were doing. Like, for example, they said that Gas Authority of India, which is going to be the agency which is going to pool gas, will have to take a cut on their transportation margins and on their respective margins. Apart from that, even the developers were supposed to limit their fixed charges to 1.1 rupees per kilowatt hour. So there was, plus the government was coming forward and saying that they would sort of ensure that there will be no taxes on the imported gas. So, all the stakeholders were actually contributing to ensure that the price was kept to the lowest possible level. I think it's time right now, basically because, if you see the spot prices of LNG now, through the media I've come to know that it has come down to as low as $10.5 per million BTU, which is fairly positive. And if you compare it with last year's prices of in October, I think it is almost about 45% down. So I think the government should do this, facilitate the stranded assets to start generation once again. This will be a very, very positive step. Though the government is saying that we will supply you gas so that you can run at a PLF of 40%. That's good enough to begin with, because it's not going to bring these gas projects into a profitable stage, but then what will happen is that it will contribute to the fixed charges.
Okay.
So that's very positive.
Mr. George, what a bulk of what the minister said yesterday appears to be financial. I mean, they have asked the finance ministry to tell the RBI to extend the commercial operation date by 1 year, to extend the repayment schedule by 25 years from 10, to extend a moratorium on principal repayment. It appears that they're just going to bankroll you a bit more. If only the financial package were to come, will it make any difference? No,
honestly speaking, it might be helpful in the short term, but that's not a long-term solution, honestly speaking. So I think the government will have to have a two-pronged, solution to this particular problem. One, of course, is, to instruct the banks and the financial institutions to address the concerns of the developers, like rescheduling of debt, giving additional moratorium and things like that. But the other bigger problem is to get these projects back on track by supplying them with the required amount of fuel through a pooling of gas.
Okay. Now, at a landed price of $10.5 per MMBTU, is the imported gas an option at all?
No, it should be an option. See, basically, if we are restricting the cost to about 5.5, which I'm confident that should be possible, then I think it should, help both the consumer as well as the developer. Because basically, like, for example, a domestic consumer like me today in Andhra Pradesh is paying something like 8.5 rupees per kilowatt hour.
No, but if you have a $10.5 landed price of gas, it becomes economical only if you pool, right? Not per se.
Absolutely.
Not only with imports.
No. I'm talking about pooling. Pooling will bring down costs. Okay. Basically, because today we are talking about $6 plus for the domestic gas.
What's your capacity utilization now, sir?
We have total of about 900 megawatts. Only 216 megawatts is operating at 55% PLF. The other two are not operating at all.
Okay. Actually, I was just coming to that. Both of your gas-based power plants, what is the exact PLF that both JP2 and Gautami operate at this point in time? And if these recommendations are taken up, if pooling is done, then how much do you think it could help in terms of an improvement?
See, one is, as of now, as I told you, JP2 and Gautami are not operating at all. This has the ability to operate at a minimum of 80-85% plant load factor if gas is available. But the government today is only talking about giving 40% gas for operating these projects. Now, I'm not saying that is good enough, but then to begin with, it is good enough because this 40% operations will contribute to the fixed charges. So my losses will come down.
Okay, let me get Vinayak Chatterjee, Chairman of Feedback Infra, into this conversation. Vinayak, thank you very much for joining us. What is the sense you got from the announcements so far, and particularly the announcement yesterday? For me, yesterday the announcements were skewed too much towards finance and too little about operations. This 40% PLF operations and pooling of gas formed a very, very small part of the press conference, if that. Some of them didn't even appear. Do you think we are any close to providing gas to the gas-based companies?
Not really. What I can see from yesterday's press conference from the media is that the government is certainly extremely concerned and are trying hard to find operational solutions. But if you ask me whether operational solutions have been found, announced, and are ready to be implemented, the answer is no. So it is right now high, I would give full marks on the high level of interest and energy that the government has and its priority to solve the problem. But has a solution emerged? No.
All right, Mr. Chatterjee, just hold on. If we still have Mr. George with us, Mr. George, just want to take that point forward that you said that, you know, if these issues are taken up, then it will help bring down your losses quite a bit. Can you give us an indication of how much do you think it could give you in terms of relief?
See, basically, if you ask me today, Jagrupadu 2 and Gautami, if they were to operate at around 60% PLF, then we would break even.
Okay.
But you're only getting 40%, no?
Yeah, but then what will happen is that today I'm reporting losses in Jagrupadu 2 and Gautami, basically because of the fixed charges, interest cost, etc., etc. That will dramatically come down.
Okay. But you break even only at 60%?
We break even today at 60%.
Okay. All right. Vinayak, what is the timeline that you would give? Since the intent is there, if this continues, do you think that Mr. Isaac George would be getting 40% of the plant operational in 1 year's time, 6 months' time?
I mean, you're asking the wrong person.
I should ask you.
I can't give you a timeline on behalf of the government.
Okay, but you're not seeing any concrete efforts at all towards resolution of the operational problems?
No, you got me wrong. What I'm seeing is I'm seeing concrete efforts. What I have not seen is concrete solutions and results.
Okay.
There's no denying concrete effort.
Okay. Mr. George, there are also some measures which suggest that pipeline operators like GAIL should reduce their transportation tariff by 20%, and also, companies like GAIL should halve their marketing margins on supplies made for power generation. How much do you think that would help a company like yours?
Certainly help, because basically it reduces the landed cost to that extent, and certainly cost of generation also comes down to that extent. So I think every little contribution from each of the stakeholders will contribute to a lower cost of generation. So that will be positive as far as we are concerned, and ultimately benefit the consumers at large.
All right, Isaac George, thank you very much for joining us. Vinayak, we request you to stay on with us on other issues that the government is trying to tackle. What is your sense about the coal-based projects? We are just seeing a disentangling of the mess. We have not seen extra coal come into the market. Do you think, however, a year down the line, you're going to see the supply of coal not be an issue?
I'm asking you, which I normally don't do, I'm asking you a reverse question. You stated that you are seeing a disentangling. Is that right? You're seeing the knot being straightened out?
Yes. One, that the coal mines are going to be re-auctioned, and at a price it will be available to the power producers before March 31st. We also had a fairly confident Anil Swarup and the minister saying that they're going to double Coal India's output in 5 years. Now that's a tall ask because Coal India has been raising its output at 3% and 5% every year. But the secretary was very confident that in a month's time he's going to give us something concrete in the first year. So assuming Coal India is able to even increase output by 10%, won't that improve the situation?
That's a truism, isn't it? But having said it, I suspect that is
a tall ask?
I mean, no, I'm saying that's a truism. If Coal India increases its output by 10%, if Coal India and the country doubles its output of coal in 5 years' time, we're all in a happy situation. So I suspect there's very little to discuss there, isn't it? So we should then wait for the outcomes for 5 years, in 5 years' time. But I suspect I suspect your question, which you didn't ask, is to do with the current situation on coal auctions. Am I right in your?
No. Why are you skeptical about the entire coal auction process?
No, I'm not skeptical. It's only that if you've seen the various reactions from commentators, experts, private sector, media, there seems to be a lot of questions that are being raised about the philosophical underpinnings of the coal auction. The first major philosophical underpinning that we are unable to understand is that we thought that the Supreme Court judgment at one stroke swept away, the broom swept away the dust of socialism history in saying that we are going to move, hopefully, that was our expectation, from allocation economics to market economics. That was a broad philosophical understanding that all of us had when the Supreme Court judgment came in. And therefore the broad sweep of auctions was one market method to move towards a market-based economy for India's largest fuel, which is coal. But increasingly we find that the caste system that has prevailed historically in this country, which is that public sector gets coal allocated and private sector has to bid for it, is continuing. Yeah. So we are a little surprised to see that under what philosophical guideline or economic guideline or conceptual guideline is this thing, is this structure which we understand is being worked out, that large chunks of coal blocks are going to be once again just allocated to statal entities who are obviously a Brahminical class, different from the private sector. And so far as private sector is concerned, not only does it have to pay the fines for governmental, for misgovernance by the executive in the past, it has to pay a fine and then it has to have an auction for the coal that it needs. So we are once again creating a caste system where a commodity which has a certain price is going to be made freely available to the statal sector and has to be auctioned in market economics to the private sector. To my mind, this is once again a distortion of market economics, and I have the simple question that is aviation turbine fuel allocated to Air India, or does Air India have to pay for it? But let me stop here.
Okay, that point is taken. There will be there can be a lot of question on the manner in which it is being done. But at the end of the day, are you going to find the power sector better off at the end of a quarter or 2 quarters?
When you talk about power sector, it is very difficult to answer your question, because the power sector is a long chain of activities. It starts from fuels, which is coal and gas. It goes to generation. It goes to transmission. Then it goes to distribution, and then it goes to last mile. So if your question is a holistic question, am I going to see the power sector better off? I'm not going to see the power sector better off, because the cost of the auctions is that it's going to raise the price of fuel. There will be huge uncertainty with the nature in which the regulators will allow pass-through of that increased coal price to both private, certainly to private operators. And finally, the mess on, there is still a whole lot of grey area on open access, transmission links, etc. And finally, we have really not seen any salvation on the DISCOMs. Most of the DISCOMs, some DISCOMs are doing very well, but we haven't seen any light at the end of the tunnel so far as the rapid reform which was expected from the DISCOM sector. So if your question is, am I suddenly going to see the power sector, brighten up? The answer is no.
Yes, I agree with you that the distribution piece has not yet been handled, but one hopes that that will be the next piece they will handle, and they have to get the state governments on board as well for that. Vinayak Chatterjee, we will have to end the conversation on that note. Thank you very much for joining us.
Thank you.